It's great speaking with you again, Alessandro. And today's interview, the topic is the future of the shipping industry. Can you first provide a brief background of yourself?
Definitely, Dustin, and nice to be back and talking to you. I am the global head of transportation for a major global petrochemical marketing distributor and project group. We have a worldwide infrastructure and currently looking to a very good expansion with our global reach and capabilities across the continent. I joined this company in 2016, last year, in July, to hold this global ownership of the transportation sources and operations for thousands of TUs moved across the globe. Um, I have 16 years of experience bringing different kind of values in different managerial roles within the liner container service industry. And since 2012, I decided to move from the carrier side to the shipper side. Um, and I have been leading some projects related to safety, cost to serve projects for multi-billion US and global chemical and petrochemical manufacturers and distributors, including the world's largest exporter of natural soda ash and also a global leader in the petroleum additives. Um, and currently, our headquarters is in Houston, where I'm talking to you right now.
Thank you. Well, what are the key trends that you see happening in the shipping industry?
It's a good question. One trend that has been discussed during the last conference is related to the slumping world container trade growth. The global container volumes during the last 2 years, 15 and 16, for the first time in history, they grew less than the GDP has grew. Historically, since the World War II, GDP has been always in a lower growth level, and this brings some concern. However, in the last quarter of 2016, which is the newest data available officially, there was a little bit of a container growth rebounding in the fourth quarter, where the volume growth soared a little bit compared to the previous year, but it's still overall looking from a more extended period of time. The trend is very, very slow in terms of global trade. So in the near term, the container shipping industry is, in my opinion, very unlikely to see the same rapid growth rate that they saw in the past. There will be also a very important test, in my opinion, for the shipping lines, how they will be undertaking the merges, whether they are willing to pay to lay up and scrap the ships, or how will be the consequence of any consolidation in the industry.
And who will be most affected by these changes?
I would say all players in the supply chain will be impacted because basically there will be, I would say, three big challenges, and that will play different roles depending on the trade lane and the location and the commodity involved. So the first one, it's about equipment availability. Every time you have a change in terms of global trade, it's not even, as I mentioned, and some opportunities are there in the market. Like, for example, we here in Houston will already, probably still this year, see a very significant increase of export volume driven by the productions of the petrochemicals of polyethylene and the plants that they are already in final phase of constructions, beginning for the production here in the U.S. Gulf. So as you have this competitive environment of the resins that I'm talking about, which is a commodity, in a situation that you have to deal with equipment repositioning cost, the equipment availability is this first challenge that I mentioned. The other challenge, number two, we have seen already, is in regards to the fewer options that we see in the market. And this is a challenge not only involving the shipper, where I am playing right now, but also the ports, the terminals, that will most likely be squeezed in terms of losing leverage when sitting on a table and discuss with the global carrier. Since the year of 1992 to now, less than a half of the large shipping lines remain. We have now more than 80% of the worldwide fleet capacity under alliances. So these few options, they bring risks of price fixing, market allocation, even if extra-officially and not permitted by law, but it becomes a very realistic risk. And the number three challenge, because of all this situation and the uneven balance, is the freight volatility. As I mentioned here, the Gulf ports are trying to get ready to take advantage of this surge in exports, especially to Asia. And after suffering for 5 straight quarters of financial losses in their global operations, according to the latest results, of course, the ocean carriers will attempt everything to try to negotiate higher service contract rates in 2017. But then you have also a lot of uncertainties, the new administration in the United States, the potential current trade war among the two biggest economies, U.S. and China, if that happens. So it can create a very interesting scenario, very unstable, and this freight volatility is my third challenge that will impact the supply chain, Dustin.
Well, how should supply chain professionals address these issues, these trends?
Yeah, I would say that it's all about risk management, and there are some mechanisms that we shippers can do, as well as the other players in the supply chain. So, first of all, data. We need to get everybody working with the same goals in the supply chain, build the analytics. We must really know where are potential opportunities in the whole chain and not look just for the next level. Ports should sit, in my opinion, with shippers, with trade managers from the major shipping lines, with importers from alternative markets, and try to see a common ground. There has to be also among the organizations themselves, all the supply chains, they have to pursue the internal alignment, getting closer to their sales and marketing departments, especially because it's going to become more critical than ever, the demanding forecast, so that there is a mutual benefit in terms of commitment of volume, signature of the contract, but also a show up of the bookings, and avoiding that the shipping lines keeps overbooking the ships as most do today, and then rolling cargoes that are really a major problem for most shippers. So these, of course, requires a strategic carrier relationship focus. shippers also will have to determine what is the right balance between long-term fixed rates, balancing contracts versus the spot rate, and analyzing the risks. And last but not least, based on the data that I mentioned in the beginning, they will have to look together and bring to this carrier relationship management with the carriers, with the shipping lines, a kind of a lane source optimization. That meaning looking really strategically where are the opportunities, the players, and kind of really implementing a joint collaborative strategy to achieve mutual benefits to both parties.
And thank you, Alessandro, for sharing your insights today on the future of the shipping industry.
You're welcome, Dustin.